Good morning, everybody. It's Q&A with Marky time. As you can see, Pete is not here today, so you got me instead, I'm afraid. Now, I know you're all wondering what I've got for morning tea and what my wife has made me, but unfortunately, she's a bit busy this morning. So I had to fend for myself, and I found a dry piece of wheat bix. That's all I've got today. A bit of a shame, but I'm sure we'll get through that nice and easily. Got my nice mug as well. Obviously, it's the West Coast Eagles 2018 Premiership Cup. Pretty much I only use this cup at all, so that's the only one I've got in the whole kitchen, but that's okay. Now, let's crack on. You don't want to hear me blabbering on about the West Coast Eagles, even though I do, but that's okay. Now, let's crack on and thank our sponsors today. They make all of our events possible, and if we didn't have their support, then we would have to be looking at charging you guys for things, but we do put as many things on for free as possible. So please support these sponsors. So we've got ALI, Bluestone, Finstro, Prosper, Heartland, Suncorp, On Deck, Speedy Finance, Affordable Staff, Insurance Advisor, Lend, Pepper Money, Strive Financial, AAMC, Effie, Credit Fix Solutions, and Trailbook Loans. Now, for our special guest this morning, we have Trent Carter, John Sgambelluri, and Stuart Donaldson from Accendo Financial. Welcome, guys.
Thanks very much, Mark.
Thanks, Mark. I hope the conversation's better than your dry wheat bix today.
Well, I can pass this on to you, mate. Might be a bit more stale by the time it gets to you. Now, just before we get into the Q&A, just a reminder, you please do submit any questions that might pop up through the control box. So if anything comes to mind, please do send them through, and then we will try to get those answered throughout the session. But look, first this morning, just starting with you, Trent, can you give us a bit of background how you all got into the industry?
Yeah, look, I started off my life in broking many moons ago, and then after a short time in broking, actually went the other way and went back into banking, and through a process of working for a few companies like Medfin, NAB Health through there, via NAB Health, and then into CBA corporate banking, ended back out in broking in about 2012, and ever since then I've been operating my own broking business called Provident Lending and Business Solutions. And during that time, I've built the team up. And yeah, so latest venture is Accendo Financial with these fine fellows here, because we definitely saw a gap in the need of commercial acumen, understanding financial statements, what it is to be an SME focused broker. So yeah, it was through a chance of fate that I met John, and then I obviously got introduced to Stuart as well, and we're all very much on the same page. So I won't speak to their backgrounds. They can probably do a lot better than me.
Thanks very much, mate. Also, John, you give us a bit of your background, mate.
Thanks, Mark. Similar, a long background in finance. My family were involved in small business for about 40 or so years, which got me enthused around the SME space. I was in the bank for a bit over 30 years, and I was the last 8 years a general manager at the CBA, both in Agri and then more on business banking in WA and SA for the last period. But my passion was always financial education, and it was something that Stuart and I had done together 20 years ago now. So it's always been there and something that I've wanted to do.
Oh, thanks very much, mate. And Stu, what about yourself?
Very similar, Mark. Certainly to John, and John's correct. We did sort of, we did actually work together in a fairly innovative area for one of the majors 20 odd years ago. But my background's very much banking and finance, and in all aspects, you know, whether it was wealth management or relationship banking or corporate banking. But the one area where the flame burnt the brightest for me is absolutely dealing in the SME space. And about 6 years ago, I decided that I was a bit jack of corporate life, quite frankly, and thought I'm going to have a crack on my own, and went out and built an education business. And in the past 6 years, I've been very active, particularly in the mortgage and commercial broking space, doing a lot of work. And then all the planets lined up and came together in the last sort of 9 months with Accendo Financial and John and Trent, and figured out that the whole is bigger than the sum of the parts. So it's worked out really well for us.
That's great. So to all of you, who came up with the idea first? Who approached you?
You're all going to speak at once. I was going to say sort of existed in its own right. I would imagine a little bit with John and Stuart, definitely with Stuart prior to Accendo. There was a meeting of chance through one of my brokers who introduced John and I, and John presented to us some of his very clever ways of looking at financials. And I immediately caught up with John after that and said, look, brokers need to understand this. And he and I embarked on that, and very quickly Stuart was brought into that conversation as someone who was doing this reasonably successfully on the East Coast. So it made sense we come together. I don't know if you guys want to say it any different, but yeah.
Well, the only thing I'd add is I was desperate, Mark. I couldn't find anyone decent, and in the end, I just settled for those two.
Jeez, slim pickings then.
It was easier to bring him in than compete with him as well. So, you know, might as well.
That's right. That's right. I think the one common theme between us is that we wish someone had explained things like this to us so many years ago.
Yeah, fair enough. Now, Stu, why do you think SME is such an important market for brokers to concentrate on?
Say that again, Mark.
Why do you think SME is such an important market for brokers to concentrate on?
Look, I think it is a really important market for brokers to concentrate on for a range of reasons. You're probably aware, but something like 30% of most brokers' portfolio is made up of SMEs, and you know that could be tradies or consultants or you know a small business or a medium business, but they're there. So that's a compelling reason in itself, because you want to ring fence your client, you don't want to open a door to the competition. But the other thing is, most people would agree with me in that I reckon, you know, working in the resi space is getting harder and harder and harder and harder. And if you define yourself by your clients as opposed to I'm a resi broker or I'm anything else, then you've got a bigger pool to play in, and you can create brand new revenue streams. And I think that's really important for you know, for the resi brokers out there. If you wound the clock back 5 years and ask yourself the question, in 5 years' time, am I going to be working harder or not to achieve the same outcome? And I think we all know the answer to that. So there is a really compelling reason to diversify your business and create those new revenue channels.
Right, mate. Anything else from the other guys?
Yeah, I'd just sort of add to that to say, you know, we definitely take a view with Accendo to say that we will sort of want to drop the vernacular of I'm a resi broker or I'm a commercial broker. We sort of want them to say that I'm an SME focused broker, because the product, the outcome of the product, whether it's consumer lending or business lending, almost doesn't matter. What's most important is that we as brokers understand SME businesses and their most important asset, which is their business. And ultimately it's the cash flow of that business that pays for whatever it is you're getting, whether it's a home loan or an asset finance for a new piece of equipment. So yeah, I think commonly we've been pushed in to say you've got to be a resi broker or you've got to be a commercial broker, and never the twain shall meet. And we sort of want to say, well, no, you can be both, but you focus on, as Stuart quite rightly said, you focus on your client, not the product.
Yeah.
And every person on this call, every broker listening in, is self-employed. They're an SME in their own right. So it's important they understand the success factors and how to read their own scorecards.
Thanks very much, guys. Now, diversification has been the buzzword for as long as I can remember, but how important is diversification for brokers in the current and future environment, do you think, Trent?
Yeah, it's massive.
Crucial.
Look, revenues are being squeezed. If you're just a resi broker, to use the vernacular we just talked about, revenues have been squeezed over the past 24 months in terms of the traditional business model, and has been since broking sort of has been iterated. It came out at a 1% commission, and it's evolved into where it is today, net of offset, utilisation, clawbacks, all those type of things that exist in the market today. Plus, it's an ever increasing market space. If you're an asset finance broker and consumer asset finance broker, it's getting very difficult just to write an income just off that single product. And again, it comes back to the conversation that we're having before. If you're going to be serious about a market space, we love SME, you need to be across all the products that you can offer them, and therefore it gives you multiple revenue streams and de-risks your business. So I think it's absolutely critical to be able to diversify your income.
Interesting, Mark. I'd just add to that. If you straw polled the audience, I'm sure that they would all agree that diversification is more than a buzzword. It's something that everyone needs to embark on. The challenge for brokers is there's no procedure manual. You can't just pull it off the shelf and say, all right, I've got some SME clients in my database, so I'm getting into SME and commercial lending. You can't do it. I mean, you've got to build the skill set, and there's greater complexity to it. And, you know, the rewards are there, but the most important thing is the first step. And when we speak at conferences, I get a lot of nodders, a lot of people nodding in agreement, but then it is absolutely a challenge to take that first step.
Anything, John?
The guys have summed it up pretty well. I actually, and on the flip side of that, we have commercial brokers that won't touch the residential space, which I find interesting as well. I love commercial because I've seen transactions written 100% outside of policy, and they've been quite lucrative, and they've led to all of the family business and employee business. But equally, to say I'm a commercial broker and not a resi broker, to me doesn't make sense either. It's about a greater pool of the market.
Yeah, very good.
And the fact
and
that
I guess
clients,
it's taken by the. Sorry.
yeah, sorry, Mark. Your clients would rather deal with you through the whole process anyway, because you know, what's paramount for them is trust, and you're the person that they believe in.
And the person that they've got the relationship with at the moment, and the trust is already there. It doesn't need to be built up. You know, it's I guess there's a little bit of fear sometimes with brokers to go to the other side, whichever side that they're on. They want to make sure that they're going to be as good a broker as they are in their field already, whether they're resi or they're commercial. So it's making sure that, you know, taking away the fear.
Yeah, Mark, that's a really key point, is that it's a confidence game. Stuart and I were only having a conversation this a little while ago about, you know, to get someone to be a competent SME broker and being able to write commercial business as good as they can resi if they've come from that world, or vice versa. You know, we're positioned as mortgage brokers in the market that once you become a qualified mortgage broker and you put yourself out there, you get the opportunity because the client perceives you to be an expert in all aspects of lending. And we know that it's so diverse that you can't possibly be an expert in all areas. But understanding their business first is about asking the right question, not knowing the right answer, and slowing the process down to get a better outcome at the back end. So you don't have to know all the answers, and you can build that confidence through being able to ask intelligent and right questions of your clients based on your observations, versus going, oh, I've seen this 1,000 times and I can just push you into that path. It's not about that. So yeah, confidence is one of those things that can only be built up through experience, and one of the things that we try and deliver, certainly through Accendo, is developing that confidence through things like our short courses and mentoring program.
What do you think any of the hurdles will be, though? You know, obviously we talk about the confidence, but what are other things that you think are going to be getting in a broker's way of trying to really upskill themselves? Take this to John now.
For them, they'll look at it through the lens of time in a lot of cases. I think there's a lot of brokers that would back their own skill sets. The issue for some of them that are wanting to branch out in commercial is that it can be difficult because there's all of these acronyms and strange words, and the problem in our industry is there's too much assumed knowledge. So everyone rolls up to a workshop or a meeting, and they're sitting there thinking that everyone else knows more than what they do. We run workshops for chartered accountants that have master's degrees in tax, and we take them through the ins and outs of financials. So a lot of them choose not to be management accountants because they don't believe they have the skill set to be able to take clients through that. So hopefully that makes all of the finance professionals feel comfortable, because we need to be comfortable with what we don't know. What's scary is we don't know what we don't know. We don't know what's out there. And it seems like every single deal we come across has all of these nuances and differences. And just when you think you know it all, you're lodging a ship's mortgage that has to be registered in Canberra. But there's a couple of keys to this, Mark, and one of them is getting it back to ground zero and assuming no knowledge, because you've got to take your client on the journey. So if you can be armed with not only the skills and the knowledge, but also the communication way of getting this through to your clients and the bank, that's important, because once we've established that we know what we know, and that's really good, and we can take this further and the client's comfortable with that, then it's a matter of being able to share the story with all of our stakeholders to get the right result.
Cool. Anything from the other guys at all?
I just think with that SME focused is that it's becomes less of a policy question. So probably talking for your traditional resi brokers, and again, we hate the term to pigeonhole, but it's very policy driven. It's black or it's white, it fits the box or it doesn't. And one of the biggest hurdles to get over is to say, well, if the policy says no, it can still be a deal. And again, that comes around what John was just talking about. It's the communication. It's probably going back to the drawing board on how you listen and how you ask the right questions and how you communicate that both to the client and the bank.
Yes, Stuart?
Oh no, look, I think everything the guy said is absolutely correct. It is about the client, and if I'm a broker and I'm not experienced in this field, naturally I'm going to be kind of nervous about going and sitting in front of my SME client because I don't really know what questions to ask. Once I ask the questions and I get the answers, I don't really know how to frame that up into a discussion paper and move forward to a mandate, or even just package a deal to put to the lender. And the broker is straddling two relationships. On one hand, they are the agent for the lending officer. They're the eyes and ears, because the lending officer doesn't know the SME from a bar of soap. So they rely on the broker to ask all the right questions, get all the right answers and package it up. And on the other hand, they need to be formidable in the eyes of the lending officer when they put deals to them. And as Trent said, you know, you're peeling back an onion here. It's a little bit different to resi, which is very process driven. This is less so. There are dimensions to it that will be unfamiliar to brokers, but my advice to brokers all the time is pull the trigger, because you can learn this stuff and you can conquer, you can overcome all these hurdles. It doesn't happen by chance, but once you do, yours is a different business model to the one that was yesterday.
And I think, you know, especially with, this is with all BDMs, I think, but especially with the commercial guys, they don't mind talking about deals. They don't mind workshopping deals. You know, the BDMs are the experts in their field. This is what they're paid for. Make use of these guys. And if it's not a deal with, you know, X bank, then it could be a deal with B bank instead. And, you know, I've spoken to a lot of commercial guys over the last probably couple of weeks, actually. And the time it takes to go through a deal is, you know, just worth its weight in gold. It pays off down the end of the track. You might learn something even if it wasn't a deal through X bank, but then you know a little bit more about their policies. And then, you know what, you've got a good, nice relationship with that BDM. They're more than happy to pick up the phone. They're more than happy to make a visit to your office and just get all the paper out on a table, and then let's just nut this thing out. And so that'd be a massive thing for the commercial guys, the less experienced commercial guys to go through, for sure.
And the BDMs are craving to do that. I mean, they are worth their weight in gold, and they'll walk into into your business and they'll walk up to the whiteboard and they'll help you, you know, literally workshop a deal. And the learnings that come off the back of that are significant.
Yeah. That's it. It's just gonna be those little things, those little kind of intricacies that you'll just kind of have a little nugget in your head for, you know, that next deal that comes through. So definitely make use of the people that are out there. There's always someone to talk to about things in our industry, for sure.
It's a very it's a collegiate type industry. Everyone is very prepared to help each other, which is fabulous, which is what I love about the industry.
Now, we've just got a question come through. Just give us a sec, guys. All right, so we've got Karen has asked, how do we pull the trigger and where do we start?
Well,
now
I'll have a crack at that. Guys. I'll have a crack at that and then hand off to the others. But look, there are pathways. There's a range of actions that brokers need to take. One is self-educate, invest the time, go to the conferences, attend to the short course workshops, because these are all building blocks. if you are starting from scratch, my strongest advice would be get actively involved with the mentor program, because what that means is if you're attending the conferences, you're going to the short course workshops, potentially you might be doing the formal qualifications, but regardless, you kind of need a mentor, because a mentor is someone that's looking over your shoulder that you can ring 24/7, that can just walk you through it. And it might be, and in our case, it's a 6-month program, but invest the time in the 6 months, because when you pop out, you will be doing deals on your own with confidence, and your competency and capability are going to be there. And I'm not suggesting it's us, but there's mentors across the industry that can help people, and that would be my strongest advice. The only thing I'd add is, I'm showing my age here, but in the back in the day, there was a cartoon called the Flintstones, and Fred Flintstone used to do some stupid things, and every now and again, the Great Gazoo, this sort of weird character, would pop up on his conscience and tell him he was doing the wrong thing. That was his conscience. Well, I kind of see the mentor as being someone who has a vested interest in the success of the mentee.
Yeah, and I'll add to that there's got to be a lot of technical prowess to it. It's got to be an end-to-end program that starts with the very beginning of, this is who I am. This is the whole building awareness, right through to and Trent frames it beautifully, right to the nurturing stage where we're continually building more business. We take for granted what we know across the industry, and I've never met anyone, or never will, that knows everything about finance, but that's what makes it interesting too. But this whole end-to-end, from managing propensity and conversion rates through to asking the right questions and putting a deal together, there's quite a bit there. So it needs to be covered that sort of way. So Trent, I don't know.
Yeah, it is that pathway of building you're building a new business. You're not it becomes less transactional, more relationship driven. It's I hate the term fake it till you make it. I prefer ask questions till you make it. And that's what the mindset shift is to become a true SME focused broker, is that there's some technical skills you've got to get proficient at, and the short course type stuff where you can learn financials and you can learn what a cash flow means, and you can start to build up those technical aspects. But then it's about being able to put those technical aspects into practice and ask the right questions of the BDMs, of your mentors, of people you respect in the industry, of the bankers that you're partnering with to put the deal together. It becomes, as Stuart said, a real collegiate approach to building your business. And I reckon there would be BDMs in WA, at least, that in my first iteration, when I was starting out broking in commercial sense, at least, that they go, oh, here's another phone call from Trent, because I dead set random rag it just to find out what I didn't know. And so if the starting block could be anything, and where do you start? It's just to be inquisitive and don't hit a point where you don't know and go, oh, I can't do this. It's just to ask the next question until you get the answer.
So as an ex-BDM, you'd rather those stupid questions up front, because they're just little ones that can be just knocked on the head. And this is from my resi background, but you'd rather those little things knocked on the head straight away than to blow up when it's a deal in the office and no one knows what's happening. So massive communication. The more you have communication with your BDM, the better relationships you're going to have with them. You might be able to get favours from them down the track as well if you're a super nice broker as well. So scratching backs and all that type of stuff certainly does work for sure. Now, Trent, you mentioned about the short courses that you've got. How have they been received by the wider broker network?
Really well. To our end, surprisingly well. We thought when we were starting up Accendo and what we're going to be doing is to be running a few little workshops here and there, as sort of, and then all of a sudden we've got partners like the FBAA and aggregators and groups like that who have really jumped behind the short courses that we're putting together, because we're finding that it is a short course. It's 90 minutes, 2 hours of work that you can put together and come out the other side with some core skills that you didn't have before. We've had guys who have been in broking for 16, 18 years who have turned around and said to us, in the 18 years, this is the best thing that I've done. And that's just the best feedback we can get, because we know we're delivering on a point that's been a little bit neglected from an industry perspective. And it's that's not being critical of the industry. It's just saying that it's been a space that's not been of heavy focus, especially through the recent times where we've had royal commissions and compliance and, you know, commission reviews, and we've had COVID, and we've had all this sort of stuff that has been distracting from other areas of finance and has been ultimately consumer focused. So a lot of the PD days, a lot of the content out there at the moment is about how to be a compliant consumer broker. And then all of a sudden we're sort of getting a few brokers giving us the feedback. This is a fresher breath air to say, actually, this is some technical skills that I can apply to my SME clients. Doesn't matter if I'm writing a home loan or if I'm writing a business loan. Ultimately, being able to understand their financials just tells me such a story about where they've been and where they're going. And then talking back to your diversification point of view, it gives them then the pathway to ask the right questions to say, well, mate, perhaps there's an opportunity here down the track or opportunity down there by the track. And people are getting that out of 90 odd minutes of work. So yeah, we're over the moon with how they've been received.
It's been really humbling, actually. I've found it incredible. Some of the emails and even the text that we've received, we just can't quite believe. Karen's question is where to start. If anyone is looking to take a step one, I would strongly recommend come along to the Commercial Lending Skills Workshop. We've got one coming up with FBAA on the 14th of June. It opened up a week or so ago and it's nearly sold out. So there's no doubt there's a lot of people there that want to do it. And we just found, Mark, that there was no short courses that were hands-on. I mean, we assume everyone knows how to fill in forms, and people are completing interactive courses, and interactive is having a multiple choice question. We could never work out how you could honestly practically understand a set of financials without rolling up your sleeves and doing some work. The other part of it is there's more to EBITDA and there's more to LVRs in lending. It's about the total performance of a business. Then you measure the financial performance through understanding the P&L and the balance sheet. And it's actually really, really simple in the end. So we go through a real life case study, we measure it, we learn how to read the financials, and people have just loved it. But that is a very good starting point.
Mark, can I just pipe in there just to make one comment, and that is, I would really like the audience to understand that these short courses of, as Trent says, 90 minutes to 2 hours, commercial lending skills, mastering cash flow, they are workshops, they are interactive, they are provided with a workbook. Now, why am I emphasising that? I really need to emphasise it because I want the audience to know they're not webinars. I know we've got Zoom fatigue. It's not like sitting there just listening and everyone's on mute and we can't talk to each other. The numbers are capped so that we can do the work ourselves. There are practical exercises and massive, in my opinion anyway, take-home value that you can apply straight away, as well as we provide tools at the back end, ratio calculators and break-even calculators, stuff like that. So just wanted to add that.
Well, it's a really good point because, as you said, everyone's pretty much over all the webinar stuff, even though we're on one right now, but that's okay. But the important part is, I guess, being able to ask those questions. You know, we've been talking about the fact that brokers need to be, you know, having the communication up and asking the questions. If they're going to go to a workshop like this, it needs to be interactive. So, you know, you can basically put your hand up and go, hey, I don't understand this. Can you go through this again? Because chances are there's probably another 4 or 5 people that are thinking the same thing.
Yeah, we do, and we give them the world through the eyes of a credit officer, because in a lot of cases, these credit managers are still the same people that were there sort of 10, 20, 30 years ago. And we talked about accountants before, and we have a theory that management accountants and credit officers are the same. They just want to seek a different result. So that's where a bit of a disconnect comes in, Mark. And people listening in would say, I get it, because I've submitted a transaction. It was strong serviceability. The LVR ticked all the boxes, and these people had 20 years experience in the industry, but for completely different reasons, the lender didn't want to look at it. So, you know, what are the sort of things that they're looking at? How are they finding out things, not ever having gone to see the business? And then there's subliminal messages that come back, such as, this deal looks pretty complicated, give me some time. That means I don't understand it, and I don't think you do either. And then the other one is there's a lot to this, which means you've given me a lot of stuff. So, but we just help bring it all down. And a lot of it is, if you think of the line that cash flow repays every single loan bar none, it's then a matter of distinguishing between what is profit, what is cash flow, and measuring both of them as well.
Cool. Now we've actually got a very festive question that's come through from Anna now as well. So you speak about sorry. And you speak about building relationship with lender BDMs. However, they are not the decision makers, which is a very good point. Credit are. Do you think lenders are making it difficult to get access to the decision makers on a deal? Yes,
but not their fault. I'll come a little bit to the defence of the lender here, and you won't often hear me say that, but it is an evolution of lending that we've gone from bank managers who could make decisions in a branch level through to pools and teams with local credit, now to pools and teams with credit who are disjointed from the actual team who are writing the credit. So you might have your relationship team pool over here in Perth and your credit decision maker in Melbourne. You know, one of the things I always espouse people should do if you've got the opportunity to do it, and often you don't unless it's a sizable deal, is get the credit officer to walk around the premises or to visit the business or to face the business owner, because 9 times out of 10, that just gives them that level of confidence. So yes, it is harder to get access to the decision makers. I appreciate the BDMs often are in that hard spot of, I can't give you a commitment, but I can give you a guide. But it does come down to a little bit of experience. It does come down to, if the bank's serious about the deal, can we get access to them? Asking the question. I would plead banks, or if there are any lenders out there who are listening to this, to say, you know, get credit officers more engaged as they can be and as appropriate in the decision-making process earlier than reading the final submission, because that is going to triage a deal. And often what I found through my career of writing commercial finance especially is that the deal that's presented and the deal that approved is sometimes different, and it's gone through a massaging process of saying, we've asked for this much over these terms, but we've got this much over this term. But that hasn't disappointed the client. We've still got an outcome for them to achieve what they want to achieve. And ultimately, if all parties, broker, client, bank, credit officer, all have that one goal in mind, is what are they actually trying to achieve? Usually there's more than one way to skin a cat. We do get caught up a little bit at the moment of the rubber stamp factory saying, doesn't fit exactly how you've proposed the deal, so therefore I'll decline it. Whereas there was perhaps another way to do it. So
I think commercial, the credit officers are a little bit more involved in that massaging and the communication with everybody involved, or do you think it's pretty much the same as kind of resi sometimes?
It depends. It depends on the bank, their model. It depends on the size of the transaction, whether you're talking about a micro or small business loan versus, say, a larger semi-corporate type loan. You know, those type of things, the higher you go, the more access I think you've got to those discussions. And that's an unfortunate thing, but that's then therefore the job and the importance of us as the broker, as the first credit assessor, to become really good at understanding financials, to become really good at our commercial acumen, to ask the right questions, to present a well thought out discussion paper. So by the time the banker gets it and it goes into their sausage factory of trying to rubber stamp deals, there's almost no thinking for them to be done. That's the best thing that we can be doing in lower level of lending environment.
Yeah, that's a really good point. That you're a broker and you're an assessor at the same time, really.
That's right. I think, Mark, there's an argument that if you can't get to the decision maker and you're hitting your head against the wall, what's the alternative? The alternative is to know your client, your SME client, past, present, and future. Where have they been? What are the pain points? Where are they today? And where are they heading? If you have all the answers, you can construct a submission and you're not going to need to have the credit officer's involvement. I totally agree. It's great if you can get them to come and meet the client or engage with you, but if you can't, just be thorough.
Yeah, and make sure they don't visit the client who's got too much stock on their shelf and therefore it's self-fulfilling when they go and visit. This is fraught when we're asking credit whether it is a deal, we should be telling them it's a deal. And if we're at all asking them how it should be structured, they won't be interested at all. We've got to go there with the plan in mind and how it should work. Let them commentate to something. And if you've mitigated all the risks, then you're reducing the chance of rework. But I'd love to add a couple of things. And the first one is, more than industry, more than client, credit's interested in who is submitting the loan. Who is the broker behind the loan? Because there's lots of brokers with a really good brand. And if I think of my time signing off credits, if it was a particular broker, then I was very interested, because I knew that they knew their stuff. And the other thing about lending, it's not just about whether it's a good transaction. We get hung up on this. We look at a deal and we think, well, our client knows what they're doing. We know they can service this. In fact, in some cases, they could only finance half the amount because they'd have available cash. But it's not just about that. If you're a credit officer, as important as your decision is the quality of the information and the data that you've produced that decision on. And if you've made good decisions based on poor data, that's a cross.
Thanks very much, mate. Now, we've got another question that's come through from Carshall. Now, I've got to go with a good mate who is currently renting a warehouse/office space for the last 15 years and was dependent on the business analyst who knocked it back because it did not service. What short course can I do that will help me better understand and present this in a better way and similar deals?
Very first one, commercial lending skills would be the prime place to start with that. It's going to give you the tools to jump. Through to mastering cash flow, obviously, but if you want to start there, because it's going to give you the skills to look at cash flow services debt, not EBITDA. And quite often we get caught up on accrual accounting, and it gets knocked back on accrual accounting because that's all we're conditioned to present to the bank. But this business may have another story about it that says the cash flow for the business is going to be strong going forward. So if you understand the core basic skills of the relationship between profit, loss, cash flow, and balance sheet and commercial lending skills, and then the next course, mastering cash flow, which says how do you then extrapolate a cash flow based on some assumptions from those data sets, that would give you almost everything you need to know and the right questions to ask that business to be able to formulate a response.
And the third, his mate wants to purchase his own warehouse. He wants to purchase it himself for his business. That's the answer to the question there.
Sorry,
just his mate wanting to buy his own office/warehouse space. That's all.
Yep. I mean, nothing wrong with the purpose. It's just about, again, all roads go back to the business who's going to repay the debt. Doesn't matter if he's doing it through his self-managed super fund and going to pay rent to it. Doesn't matter if he's going to buy it in a family trust and pay rent to that. It doesn't matter if he's going to buy it in the business entity or whatever tax advice he's got to buy it in. All roads lead back to the trading business that's going to repay that debt.
And it's about how is the business performing outside of that? So we get that they generate a profit and they've got a bottom line and therefore that can service the debt. But how are trends with the creditors and debtors, and how is the stock holding in the warehouse? And is there any sort of costs coming up? And what's the plan look around repairs and maintenance within as well? Now the hard thing is, where do you look? And for a lot of poor brokers, they're sitting down, they've got all of this information, they've got notes from a fact find, they've got scores of financials from the accountant. So half the battle is, I've got this industry and this is a transaction. These are the 5 or 6 key things that I need to look at straight away, because the worst thing that happens is you put that deal together, you've measured it for the warehouse, everything fits, you submit it, you wait 2 weeks, someone picks it up, and guess what? There's some rework because a couple of the trends aren't so good. And now we've lost another week or 2, and now we've gone back. And we always say in our workshops, we only get one chance at a first impression. Now, when that goes back up again, and then it goes back up a 3rd time, this is how it sounds like when the BDM is handing it to the credit officer. And I know because I was one to say it. I'd say, look, this is probably a good deal, but this is the 4th time I've seen it. I'm not interested. So rightly or wrongly, that's what can happen if we just don't, that initial look at the information and the questioning for the clients. That's the crucial bit. And the good news is the customers, the business owners, most times they've got all the answers to the questions. We just need to know what to ask them.
Yeah, look,
And that's probably, you're going.
They've not only got the answers to the questions, they actually love you asking the questions because you're showing an interest in their business. I mean, but it was a great question that was just posed. I mean, it's one of the scary things for brokers is they go and secure a deal, maybe it's to finance a new crane or forklift, and they say to their clients, send us all your information. And the worst thing that can happen to a broker is they get an email of a zip file, because when you get a zip file, you open it and there's about 4,000 sets of accounts, and you think, how the heck am I going to put all this together? But it's not as complex as it seems. It seems that it's exactly as Trent said. You've got to be able to find your way to the trading entity to tell the story and share the story with the lending officer.
And quite often, some of the best advice I give brokers, I reckon, and the best advice I was given early on in my career is slow down at the start to get a better outcome at the back. I think we're, as brokers, too rushed to get it to the BDM, give them the 2 years financials and say it's a deal because the client's a really good guy and they've been trading for 20 years. You know, that should be enough to get the deal done right. Whereas if we slow down, be more invested, ask the right questions, get the client talking about their business, as I say, they have all the answers, do our own level of analysis, ask questions about the things that are making us scratch our head, because it's going to make a credit officer scratch their head, then present a well thought out discussion paper around it, reduces your rework, your pathway to approvals faster, and guess what, you get paid faster. You know, we don't get to control our working capital cycles inside broking, as in we don't get to ask the banks to pay us any quicker. No. But we can reduce our rework and condense our time that applications are assessed. So slow down at the front to get a better outcome at the back.
Yeah, sorry, John, be comfortable with what you don't know. And to Trent's point, whatever you're thinking, the credit officer will think. So if you're dealing with a labour hire company, the first thing credit will think of is how do they find their people? Well, you need to ask the question as well. Sorry, Stuart.
Oh, I was just going to say, two of the greatest skills that you can acquire and have in the SME space is one, communication, and two, understanding financials. It's that important to the relationship that you're going to have with your client.
Thanks, guys. Now, we've got a little bit of a segue there, I guess. We've got another question from Lester here. He does an ownership drawing followed by a cash flow drawing. What are your thoughts on this?
All drawings.
Yeah.
Do you mean as in I'm thinking an ownership chart? Is that? I'm assuming that's a really good way to start. In fact, one of the workshops that we run, we break down the entities. That's a very good way to do it. And if the accountant hasn't made one up, even hand draw one, because that's one of the first things you like to look at who I'm dealing with here. And there's obviously always a couple of important entities. But my plea is ask. The client we use in our commercial lending skills workshop had one of the most complex structure charts that I'd ever seen. And I phoned the accountant and he said, which bit do you want me to show? And I said, start up the top left, work across all the way down to the bottom right. He said, you're the first person that's asked me how this works. And Mark, I don't know how anyone would have made any sense of that. But what that person's talked about is a good starting point around the fact finds. It's the technical sort of stuff.
It's also, I think,
well, I guess,
misunderstood the question to start with. I thought it was going to be drawings out of the business as an income. But however, in terms of your organisational charts, I think you find no matter how complex they are, there's still only ever one or two trading entities that you're really telling the story about. The rest of it's just where the money ends up into the ultimate bucket and where they pay tax. So whilst, yes, you may get an approval and they may require to see ATO portals or they might want to condition drawings to a certain entity or to make sure that they've got guarantees from each other entity because the bank doesn't want to lose control of the cash flow. The story and where the approval is going to be based on is the trading entities. So, and there's usually only one or two of those in any complex array of circles and triangles and connected lines.
Anything else on that, Stu?
Oh, no, not really. I think that pretty much sums it up. And I agree with Trent. I mean, like I said about the zip file, it's never as complex as it first looks, but that comes back to that whole confidence levels of brokers. And, you know, we talked about access to credit officers and things like that and structuring deals. In our mentoring program, one of the most popular features is we actually bring credit officers in to talk about what's important to a deal and talk to the mentees about it. So it's never as complicated as it first looks, but someone's got to show you. Someone's got to help you and, you know, help you down that pathway so that you understand each and every subsequent time you come across an opportunity.
Guys. Now, John, do you foresee any changes to lending for SMEs?
I do. I think it's an evolving space, and you'll see already letters of offer, depending on the level of lending, have changed for SMEs. They've got a little bit chunkier if the lending's under 5 million. I think some of the main changes are going to be a cross application of capital. So if I think of how a bank is measured at the moment, profitability and growth of assets or loans is the number one measure. If you were to ask any lender one thing that you could take from them, they'd probably tell you a housing loan at the moment. Now, application of capital adequacy, well, we know that every time the banks lend $1, they've got to put $1 aside to cover that capital. What's going to happen is, as money dries up, we've got all of this money on deposit. Credit card debt is its lowest level for 30 years. The banks have more money on deposit than they've had at any time this century. So the steer is lend. Now that's going to change. Obviously, there's going to be a cycle. Those deposit funds will dry up. And once again, there'll be a premium on transactional and deposits. When that time comes, the application of capital as a measure will go right up, and it will go right up to number 1 or 2. What that means for an SME is if they want a good transaction and they want to get the right result and they want to get the best price possible, then they're going to have to put their loan forward in the best possible way. Because the other thing with all of this, Mark, the quality of the application that we put forward determines the SME's risk grade, and the risk grade determines the price that they pay, their margins. So I think that capital adequacy stuff will change things.
Anything else, guys?
Oh, Mark, I'd just add that there is definitely a trend and a shift to full submissions from a lot of the lenders now, full credit submissions, full financial statement analysis. You obviously have your smaller transactions and cash flow lens through the fintechs that only require 6 months worth of statements. But even that, you know, we advocate strongly that you've got to build a cash flow and be able to interpret it and change it and everything else to truly understand how cash flows through a business. But there's a shift to full credit submission. And the other trend that I would keep my eye on if I was one of the audience today is that there is a trend for sure of SMEs engaging with brokers to write their commercial business. Historically, it's been the banks that have been the big winners there, as you know, but it's following the same trend as has happened in the resi space. So as we know, resi dominates. Why? Because they trust the broker. They have a relationship with them. They're independent. They can find the best deal. How is that any different in the commercial space? It isn't. It isn't any different at all. So just keep an eye on that trend and hopefully ride that trend yourself.
But just one other thing to mention.
The trust in the broker.
Yeah. Actually, the nature of SMEs is changing as well. Been on a project years ago. It was a magnificent hotel, but it turned into a 6-star prison, Mark. It was a pretty grueling 8 days, and we were mapping out some work for the future for one of the majors, and it was the home loan applicant of 2030, and that will be someone in their early 50s. More than likely, a female will be on the average. They'll work 3 days for a corporation and they'll be self-employed for the other 2 days. The world's changing, so the other part of it is all of the wage and salary earners, part of their working life is pivoting towards being contractors and self-employed.
Yeah, I think that's the biggest thing is that regardless of what you're doing and what you're looking for, self-employed is becoming a bigger and bigger market. It's the biggest employer nationally as far as as far as an employer base is small business owners. You know, they employ more people than any other industry. They contribute over half of the nation's GDP. So it's such a big market. I think that it's well overlooked and has been for a long time, perhaps because it's not as quick as doing a home loan. It's not as transactional, but the value of it is so huge. And this hasn't been lost on banks because they have this thing called share of wallet, which everyone should know about, which is, you know, they want to get people across 5 products because they become sticky, and that's a relatively hard thing to achieve for a consumer, but it's a relatively easy thing to get for a business owner. So all the banks really want the SME clients, but the problem that they've got is that a lot of the guys with the acumen are now retiring because they're going to hitch up the van and do the victory lap of Australia. And so I think that there's a big place for brokers to step in and fill that void in terms of providing that commercial acumen into the bankers to be able to provide well thought out deals. So I think it's just a massive market that's growing.
Remember that, you know, as you said earlier, Stu, you know, you've got the details of these people on your books already. You know, 25–30% of your clients are going to be SMEs. You know, you can start doing this tomorrow type of thing, you know, because you have all these people's details, you've got all their documentation, and you're halfway there already. You just need a little bit more of a push in your head to go, let's look at these things differently and let's try and do a commercial deal.
And if you think about what Trent just said about the banks focus on share of wallet and, you know, 5 products, why do the banks focus on that, and how is it any different to your business? The banks focus on it because they know that it's a multiplier effect. They make a huge amount of money if they have more than one product. So why can't you, would be the question that I would put to a broker, because if you've already got the clients, you might as well add to the you know, to the number of products that you sell per client.
I know in my business, if one of our guys does a deal and it's a home loan deal for a consumer, they'll do their home loan. They may pick up their car loan sometime in the next 2 years and may pick up a top up of that loan or a refinance in the next 4 years. So there's maybe 3 to 4 opportunities in the first 4 to 5 years of relationship with that client. I know with an SME business, if I help them out, it might be a piece of working capital or equipment to start with or something like that. The next thing I'm going to do is I'm going to be able to get a look at their home loan and improve their rates. The next thing I'm going to do is look at some of the core debt and be able to restructure that on the next opportunity of a compliance report or an annual review opportunity. I'm going to pick up all their asset finance. I'm going to get their overdraft or working capital. Plus the sales manager is going to walk into the owner's office on Monday and say, hey, look, I've just bought a house on the weekend, and he's going to go talk to the company broker. So within 12 to 18 months, I've typically picked up much more opportunity from that one relationship, being able to understand one thing, which is their business cash flow, versus having a consumer where I've had to work pretty hard to get one transaction set and then work pretty hard again to maybe get another 2 or 3 opportunities.
So without opening up a can of worms here, Mark, the annual review, I know it's the bane of a lot of brokers' existence, and accountants complain to us royally about the process. Few things with this: don't waste an annual review, turn it into a good thing. It will do a couple of things. It will bring you much closer to the client. If you can make this a smooth process, I'll love you forever. Secondly, it's almost the best way to understand how lending works. It's the lump sum of everything that's happened in the whole lending process up until this point. It's all there, all documented. So it's, if you don't understand the letter of offer or annual review, go through it and give it an understanding. And of course, there's opportunities that come from that. Every annual review would surely have an opportunity to come out the back end, whether that's any of the consumer stuff or, to Trent's point, some of the equipment lending.
If you're doing all these things, it doesn't give the opportunity to another broker to take your client away. This is they become a lot more sticky in the long term as well. If you're able to be that one-stop shop, then another broker's not going to be able to go, well, I can actually do all these things for you as well, and then you lose your client for life instead of having them for another 10 years.
Correct.
Yep, 100%, Mark. I mean, the one thing I would say to everyone out there is, however you do it, figure out a way to present yourself to your marketplace as a one-stop shop. Now, if you're not the one that can write the equipment finance, you still want the clients to come to you. You take it and you find the pathway, whether it's a partnership model with someone else where you're sharing the commission, or it's a, you know, a two-way reciprocity type arrangement. But find a way to be the one-stop shop. You are the portal, if you like, the human portal for your clients to go to for all of their finance needs.
Well, thanks very much, guys. Now, just one last question, okay? Now, it's more of a piece of advice. If you all had one piece of advice for ambitious brokers, what would it be in terms of dealing with SMEs?
Very good question.
If I building engagement with SMEs is not unlike people that you manage or even your kids. Ask them questions you don't know the answer to, and they will talk forever about their business.
I'll have a crack at it. If you believe the story that this is a path you want to go down, do something today that will change your world tomorrow, and pull the trigger. That's 2 bits of advice, but that would be my advice.
I would say slow down and ask lots of questions from everyone, not only your client, the BDMs, brokers that you aspire to be like who have already got it, companies like Accendo, FBAA, whoever you think can help you, just start asking questions.
Well, look, thanks very much, guys. That was awesome. Now, as mentioned earlier, these guys do have a few workshops coming up. They are all going to become the screen very soon. There we go. So they do start obviously from workshop 1, 2, and 3. They do go in sequential order there. So you can start having a look on our website through our events page, and you can look at the registration details from there. But they will be continuing throughout the course of the year. As we've just spoken about, you know, it may well be a very worthwhile experience to go through there. But look, a final thank you to all our guests today, Trent, John, Stu. Thank you so much for your time. I'm sure everyone got a lot out of it. I'm glad all the questions were coming through as well. It sounds like everyone was very engaged as well.
Thanks, Mark.
Ben,
Thank
loved
you,
it.
Mark.
Thank you.
All the
Thanks
best,
very much, guys.
Good luck to everyone.
Thanks,
Thank
everyone.
you.
Yes. Now, unfortunately, next month for everybody else, I think Pete is going to hijack his own show again, unfortunately. So we don't have anyone scheduled in just at the moment for next month, but keep an eye out on our website and through our social media pages to see who will be coming up next month. But that will be on the 17th of June next month. Okay. Now, thanks again to our sponsors. We have ALI, Bluestone, Finstro, Prosper, Heartland, Suncorp, On Deck, Speedy Finance, Affordable Staff, Insurance Advisor Net, Lend, Pepper Money, Strive Financial, AAMC, EFI, Credit Fix Solutions, and Trailbook Loans. As I said, please do support our sponsors. They bring a lot of our content for you guys. Okay. Now, it has been an absolute pleasure this morning. There will be an email that does follow up the session today. It will give you your CPD code. There will also be a short feedback survey. Obviously, it'll be a lot better than what Pete would normally get on his session, but please be nice. Thanks very much, guys. And look, please have a good rest of your day. Cheers. See you guys.